Hey my dear students, welcome back to the CA final revision series. From the last few days I had a little bit of throat issue, so that's why there has been a delay in uploading of the videos. So now going forward delays will not happen. So now whatever remaining chapters we are left with, as quickly as possible you will see the content getting uploaded on a very regular basis, on a very frequent basis you will see the videos getting uploaded. So sorry for the delay. So having said that, let us proceed further now and try to revise the remaining chapters whatever we have left with. So now we will be taking up the chapter related services for the purpose of revision. So which chapter we are going to revise now? We are going to revise now a chapter called related services. So basically, as a part of this chapter, we are trying to revise two standards. One is SRS 4400 and the other one is SRS 4410. So SRS 4400 is going to give us guidance regarding how to perform engagements relating to agreed upon procedures. So SRS 4400 is going to talk about how as a practitioner, how as a professional accountant, we are supposed to perform engagements which are dealing with agreed upon procedures. Similarly, SRS 4410, SRS 4410 is going to talk about compilation engagements. So in case if some client is calling upon us to do some compilation engagement, how we are supposed to do that compilation engagements, that is what SRS 4410 is going to give us the guidance. But before that, first try to understand what exactly is the meaning of this term related services, how it is going to differ from other kind of engagements. That we will try to spend some time in understanding in revision. Why? Because once we become clear with what is the meaning of this term related services, then the discussion of the standards serves more purpose. So that's why we are going to spend some amount of time now immediately to understand what are these related services. Okay, right. So related services means, take for example, see, once we become a chartered accountant, once we have become a chartered accountant and once we have taken the COP, so we will all be known as practicing chartered accountants. So as we all are aware, if you have become a chartered accountant and if you are into practice, you have to make a revenue, you have to make a living, right? How you are going to make a living being a practicing chartered accountant? We are going to offer some services to the society. So to the society, we offer some services and in return, we are going to generate the revenue out of it. So being a practicing chartered accountant, we can do various kinds of engagements. Till now, whatever discussion we had till now, whatever chapters we have revised, so those all chapters are talking about only one kind of engagement, which is audit engagement. So being a chartered accountant, being a practicing chartered accountant, one of the major assignment which we handle, one of the major engagement which we generally do is audit. So till now, whatever chapters we have revised, those chapters are all also mainly talking about audit related engagements only. But do you think, being a practicing chartered accountant, do we offer only audit services to the society to make a living? The answer is no. Audit is one of the major area of service which we are going to offer and generate a revenue, but it is wrong to say audit is the only engagement which we do. No. Apart from audit, we are going to offer various other engagements also by which we can make a living. So what are that various kinds of engagements? See, first category of engagement which I do is, as I've already told, we are going to do audit engagements. Sometimes we practicing chartered accountants will be called upon to do some engagements which we call them as review engagements. Sometimes we practicing chartered accountants will called upon to do verification of some prospective financial information or non-financial information. Sometimes we chartered accountants will be called upon to perform some work on prospective financial information, that is from future financial information or sometimes non-financial information. So sometimes we will be called upon to do such engagements also. So mainly we are called upon to conduct audit. So in audit, what we do is we do a in-depth examination of historical financial information. In audit, what we are dealing with historical financial information. Then in review also we do some verification, but it is a limited assurance engagement. Review also involves working with historical financial information. But as a chartered accountant, we might not always be dealing only with historical financial information. Sometimes the client will come up with some engagements where we are required to work on future financial information. Like since you are already doing the articleship, sometimes we will do something called projections. Sometimes we do something called forecast, or sometimes we might be required to deal with non-financial information also. Client might give us some work relating to non-financial information, like giving a report on internal controls. So like that, we might be sometimes required to perform some work on prospective financial information or non-financial information. I will call all these three categories of engagements as assurance engagements. I will categorize them as what? Assurance engagements. These are the engagements where we give our assurance, where we give our report in which we will express a conclusion or in which we will express a opinion. So basically, in audit engagement, in review engagement, and the engagement which involves prospective financial information or non-financial information, we give a report where we are delivering our opinion, where we are delivering our conclusion, which will be used by somebody for the decision making. So basically, in all these three engagements, we offer assurance, or we give some level of confidence to the reader. But being a chartered accountant, we will not always do only verification work. We will not do all the engagements where we offer assurance. Sometimes we perform some non-assurance engagements also, where we do not express any opinion, where we will not give any conclusion, where we are not giving any kind of assurance to the users. So those fourth category of engagements, we are going to call them as related services. Fourth category of engagement, we call them as what? Related services, which will not involve any kind of assurance. So in the related service engagements, we will not give any confidence to the user. We will not express any opinion. We will not give any conclusion. So those kind of engagements, we are going to call it as related services. Yes or no? See, quite possible. So we chartered accountants don't always do only verification. We want to do some other things also, where we don't give any opinion, any conclusion. So those engagements, we are going to call them as related services. And how you are going to do that related services, that guidance has been given under SRS, Standards on Related Services. See, let me give you one example. Let me give you one example of the related service. Like for example, we have something called compilation engagement. We have something called compilation engagement. So how compilation engagement could be a related service? Let me give you one example. Assume there is a practicing chartered accountant. There is one client X Limited. Now this client X Limited, as we all know, this client is required to maintain books of accounts. This client is required to prepare the financial statements. See, this client has maintained books of accounts, but they don't have capable persons. They don't have qualified persons in their organization who can prepare the financial statements as per Schedule 3 and accounting standards. Or they had a chartered accountant for some period of time, but recently that chartered accountant has left the organization. So now inside the organization, there is no capable person who can understand the Schedule 3, who can understand the accounting standards, and who can guide them in the preparation of the financial statements. There is no such person inside the company. So then this company, what they thought is, let me do one thing, let me go to a chartered accountant. So they came to you. You are a practicing chartered accountant. They came to you and told, sir, we have maintained our books of accounts. We need you to prepare the financial statements. We want you to assist us in the preparation of the financial statements. And if you assist us in the preparation of the financial statements, we are going to give you some fees. For example, they told, sir, please help us in the preparation of the financial statements. We will give you 2 lakh rupees of fees. Will you accept this engagement or not? Definitely. See, when I'm getting the fees, why I would say no to an engagement? So definitely I will do the engagement. So as a practicing chartered accountant, I told, okay, sir, I'm happy to help you out. I will assist you in the preparation of the financial statements. Please give me the fees which you have agreed. So now here, if you find, this is also one engagement. This is also one engagement where we chartered accountant are offering to do some service and where the client is offering to give us some fees. So basically, this is also an engagement. But if you pay close attention here, I am not providing any assurance here. I'm not providing any assurance here. Just I'm using my expertise, my financial expertise, my accounting expertise. That expertise I'm trying to provide it to the client to help them in the preparation of the financial statements, in which engagement I will not give any assurance, in which engagement I will not give any opinion, in which engagement I will not give any conclusion. So this compilation engagement is one of the example of the related service. Compilation engagement is what? One of the example of the related services. So compilation engagement is not the only engagement which falls under related services. There could be n number of engagements which could fall under the category of related services. Like if you remember, when we have revised the chapter of professional ethics, there we have seen something called management consultancy services. So there are plenty of management consultancy services which will fall under that related services wing. Able to understand? And when you are performing such engagements which does not involve any assurance, there also you start looking for guidance, and that guidance has been provided by SRS. And as I was telling you, there are two SRS standards which we are required to discuss as a part of this chapter. One is SRS 4400 and the other one is SRS 4410. So SRS 4410 is going to talk about how you are required to perform compilation engagements. How you are required to perform compilation engagements. What is the meaning of the compilation engagement? That's what just I have told you now. So in case if a client has approached you asking you to help them in the process of preparation and presentation of financial statements, that engagement we call it as compilation engagement. And as a chartered accountant, how you are supposed to perform that compilation engagement, that guidance is given under SRS 4410. On the other hand, there is one more standard, SRS 4400, which is going to give you guidance when the client has come to you and asked you to do something called agreed upon procedures. Asked you to do something called what? Agreed upon procedures. So let us try to understand what do you mean by this agreed upon procedures. So if we understand what is exactly the meaning of agreed upon procedures, then understanding of the standard becomes very easy. So if you go by the term, if you look at the term literally, agreed upon procedures, that means in the agreed upon procedures engagement, we agree with the client. We are going to agree with the client regarding some procedures which we are required to perform, and we perform only that procedures. The name itself says agreed upon procedures. So in this kind of engagement, we are going to agree. We are going to enter into an agreement with the client to perform specific procedures which the client has expected from us. So client will ask us to do specific procedures. We will do only that procedures, whatever we have agreed, and whatever our findings are there, our factual findings, whatever are there, we will report that factual findings. That engagement, we call them as agreed upon procedures. Let me give you even more practical example to make you understand. Take for example, there is a client X Limited. Now this client for the financial year 23-24, they have maintained books of accounts. On the basis of that books of accounts, they have prepared financial statements, and those financial statements are also audited by some practicing chartered accountant, and they have the audited financial statements ready. They have undergone one audit engagement. But this client X Limited, they feel that there is some problem regarding their trade payables. There is some problem regarding their trade payables. So they want some assurance. They want to perform some kind of procedures on trade payables. Who? The management of the client X Limited. They want some procedures to be performed on trade payables. So what they have done is they have went to another practicing chartered accountant. So here there is a practicing chartered accountant, Mr. M. So the management of the client X Limited, they went to this practicing chartered accountant and asked this practicing chartered accountant, sir, in our entity, we find that trade payables is having some issue. We will tell you some procedures. What the management is telling? We will tell you some procedures. You please perform that procedures. We will tell you some procedures. You please perform that procedures for us. We will pay you certain amount of fees. Like the client is telling, sir, you do one thing. You get all the trade payables balances. Try to compare it with ledger balances. Try to compare it with ledger balances. Number two, you get a list of trade payables. Try to get external confirmation. Try to get confirmation from each and every trade payable. Number three, you try to match the trade payable balances, whatever are there in the balance sheet, whether that trade payable balances are matching with trial balance figures or not. That also you try to do it. Number four, we want you to verify each and every trade payables ledger. We want you to verify each and every trade payables ledger. When you open the ledger, whatever amounts are credited in their accounts, we want to check whether those amounts are matching with the invoice amounts or not. Basically, whatever purchases you have made from the trade payables, whether that purchases amounts are matching with the invoices or not, we want you to perform. And also, we want you to go and personally meet with some trade payables. We want you to go and personally meet with the trade payables once. Go to physically their premises and get the confirmation regarding the amounts. So like that, what the client is telling is, he is expecting me to perform some procedures in the area of trade payables. Like he wanted me to compare the trade ledger balances. He wanted me to cross verify with the trial balance. He wanted me to cross verify with the confirmations. So these procedures, the management came to me and told, sir, you have to perform only these procedures. Only this you have to perform. See, if you pay close attention here I don't have any freedom to choose what procedures I'm going to perform. So here simply, as a practicing chartered accountant, the client will come to me and they will ask me, sir, these procedures you have to perform. That's all. You don't have any freedom to decide what you can do, what you cannot do. That we are not giving the freedom to you. We will tell you some procedures. You agree to that and perform that procedures only. Like only perform these procedures. After performing these procedures, whatever your factual findings are there, what are there? Whatever your factual findings are there, you tell to us. Whatever you have found out, you tell to us. But please very be careful here. So you will give the report. In that report, you will mention what findings you had. You are not going to express any opinion, you are not going to express any conclusion. So just to report all the observations, just report all the findings, whatever you had. The people whoever have appointed you, they will form the decision, they will form the conclusion, they will form the opinion. So what is your responsibility? Just the client will come to you, agree with you some procedures, you perform just that procedures, and whatever findings you had, report that findings. You are not supposed to give any opinion, you are not supposed to form any conclusion. Just report your factual findings, give it to the client, let the client make his own opinion, let the client make his own decision. So these are kind of engagement, I call them as agreed upon procedures. Now got clarity why this name agreed upon? So basically you are agreeing some procedures with the client, that procedures only you are performing, that's why the name agreed upon procedures. Clear and comfortable, everybody? So in case if some client is coming to you and asking you to perform these kind of engagements, so here you have to become here you have to apply whatever has been given under SRS 4400 to look for guidance how to perform these kind of agreed upon procedures. Clear, everybody? So SRS 4400 is going to give guidance regarding agreed upon procedures, and whenever a client has approached you asking you to do some compilation engagement, then how you are supposed to do that engagement, that guidance has been given under SRS 4410. So since we understood what does each engagement mean, let us try to understand what exactly guidance these standards are giving. Clear, everybody? So we will go to SRS 4400 and let us see how we are required to perform agreed upon procedures. How we are required to perform agreed upon procedures regarding financial information. So here, what is the how you are going to differentiate this agreed upon procedures from audit? In audit, we give assurance. In agreed upon procedures, we don't give any kind of assurance. So in the case of audit, in the case of agreed upon procedures also, we perform audit procedures which are similar to audit. But the thing here is, in the agreed upon procedures, we don't have freedom to choose what audit procedures we are performing. Only client will tell us procedures, those procedures only we will perform. So that is what the major differences between audit versus agreed upon procedures. So one of the key difference between audit and agreed upon procedures is related to assurance. In audit, we express an opinion and provide assurance to the users. But however, in the agreed upon procedures, we are going to give a report, but in that report, what we will do, what we will mention are factual findings only we will mention. It is whose, will we express any opinion? No, we are not going to express any opinion. No assurance is given. So just whatever our factual findings are there, those factual findings we will report and let the user take their own decision. And they have given an example of agreed upon procedures with regard to accounts payable. The same example I have also used to make you understand the concept of agreed upon procedures. So this is how majorly audit is going to differ from agreed upon procedures. Okay, sir, a client has approached you, asked you to do the audit. So now how you are going to proceed further? How you will proceed further to perform that agreed upon procedures? What and all you have to comply, what and all you have to check for, what and all you have to analyze, so what requirements you have to comply. So all that guidance has been given under this standard. So general principles of an agreed upon procedure engagement. So if a client is coming to you and asking you to perform agreed upon procedure, what general principles you have to keep in mind? Number one, we have to comply with ethical requirements. Like the way we comply with ethical requirements in the case of assurance engagements, here also we are required to comply with ethical requirements. What are the 5 ethical requirements? Integrity, objectivity, confidentiality, professional competence and due care, professional behavior. So these are 5 ethical requirements we have to even comply in the case of agreed upon procedures also. Like as you could see here, we need to comply with integrity, objectivity, professional competence and due care, confidentiality, professional conduct or professional behavior. One more thing also, they say we have to do the audit, we have to do that agreed upon procedures as per technical standards. Nothing but we are required to follow that SRS 4400 requirements. Now I have one question for you. Is the practitioner required to be independent in the case of agreed upon procedures? For audit review and all, we say the auditor should be an independent person. But you tell me, is independence required in the case of agreed upon procedures engagement? The answer is no. Independence is not a mandatory requirement in the case of agreed upon procedures. Why? Can somebody tell me the logic? See, we expect the practitioner to be independent when they are giving any assurance. But in the case of agreed upon procedures, we don't give any kind of assurance. We are not giving any kind of confidence to the users. So no one is going to rely on us for their decision making. So basically, in the case of agreed upon procedures, if you go from the perspective of the standard, independence is not required. But sometimes some clients might have their own requirements. Sometimes clients might feel that even for performing agreed upon procedures also we need independent person. If the client is having such requirement, then they will appoint independent person. But if we directly go into it, there is no requirement of independence in the case of agreed upon procedures. So basically, first thing, comply with all the ethical requirements, and particularly independence is not required. Next, defining the terms of the engagement. Basically, we need to have one engagement letter. In the case of agreed upon procedures engagement, the requirement of the engagement letter is very, very high. Why? Because as a practitioner, you are performing audit procedures, you are performing agreed upon procedures, whatever your client has told you. So that's why it is very important for you to be clear about the terms of engagement. What is expected from you, what you are supposed to do, what you aren't supposed to do. So that has to be clearly set out. So in the case of agreed upon procedures, engagement letter is very, very important. You have to draft an engagement letter containing all the terms and conditions and get it signed by the client. You also sign it. So you need to have a engagement letter. So what matters are required to be included in the engagement letter? Number one, what is the nature of the engagement? You have to clearly mention in the engagement letter that this is a related service. It does not constitute audit. It also does not constitute review. You have to clearly mention that we are only performing agreed upon procedures. We are not doing any audit. We are not doing any review. And also you have to mention purpose. For what purpose this engagement is performed, for what purpose these agreed upon procedures are getting performed, that purpose also has to be stated clearly in the engagement letter. Identification of the financial information, on which financial information you are required to perform agreed upon procedures. Like in the example I have told you, on the trade payables we are expected to perform agreed upon procedures. So clearly identify that information on which you are supposed to perform agreed upon procedures. And nature, timing and extent of the specified procedures. Then write in that engagement letter what nature of procedures you are performing, what extent of procedures you are performing, what timing of the procedures you are performing. And also limitations on distribution of the report of factual findings. Finally, whatever report you give now, in which you will include the factual findings, to whom it will be circulated. Is there any restriction on distribution? Is this report should be made available only to few people, or this report should be made available to everybody? So you have to include in the engagement letter, are there any limitations on the distribution of the report of actual findings? So that's why it is in the interest of both the client and the auditor sends an engagement letter. Who has to send the engagement letter? Even in audit also we say auditor will send the engagement letter to the client. In the case of agreed upon procedures also, as a practitioner, it is your responsibility to send the engagement letter and get it signed by the client. Understood? And particularly in your engagement letter, some specific matters you should not miss out. What are the most important things which you should not miss out in the engagement letter? Number one, listing of the procedures. So basically what procedures you are required to perform, all that procedures you have to list it out, and a statement that distribution of the report of factual findings would be restricted clearly. That means that these 2 points you should not miss in the engagement letter. So 2 things: one, what what procedures you are expected to perform, and to whom the report will be circulated, to whom the report will be distributed. These 2 are going to be very, very important. These 2 should not be missed out in the engagement letter. Okay, so first thing what we have done, we have to check the compliance with the ethical requirements. Second one, we need to draft the engagement letter containing all the terms and conditions. Then what we will do once we drafted the engagement letter, next thing, we have to spend the time on planning. Now we have to plan for agreed upon procedures, like the way we plan for the audit strategy planning and program. On the similar lines, even we need to plan for agreed upon procedures. And finally, after you have done the planning, now what you should do? Execution you have to do. By planning, the engagement does not come to an end. So after you have done the planning, you have to execute that also. So how we will execute? By performing procedures. What kind of procedures are there? As I have told, universally 7 methods or 7 procedures are only there. What are they? Inquiry, observation, analytical procedures, inspection, external confirmation, recalculation, reperformance. So these procedures only we will perform. Even in the agreed upon procedures also, it is not going to change. So that 7 methods, whatever we have learned, any of that 7 methods we might agree and perform. Like inquiry we do, analysis we do, recomputation we do, comparison we do, observation, inspection, external confirmation, recalculation, reperformance, analytical procedures. So any of these things we will perform. Okay, so you have checked the ethical requirements, you have defined the engagement letter, you have done the planning, you have done the execution, you have performed the procedures also. Now after performing the procedures, you will have the findings. No, I told you are required to report that factual findings. Once again, I'm telling you have to give a report, but on that report, you will not give any opinion. Whatever findings you had, that factual findings you are required to report. So finally, after you are done with all the procedures, now you have to start reporting whatever findings you had. All that findings are required to be reported in the form of a written report. Sir, how the report should be prepared? Let us have a look at it. So now, when you finally give the report of factual findings, what should be the contents of that report? How that report has to be prepared? What contents should be there? So on that also little bit of guidance they have given. So like first there should be an appropriate title, an appropriate heading you should give. Then there should be an addressee to whom you are submitting that factual findings. Generally the management or those who ever have appointed you, they will be the addressee. Then identification. After you have included the addressee, then you have to identify on which specific financial or non-financial information you have performed agreed upon procedures. Like if the client has appointed me to perform agreed upon procedures on trade payables, I have to mention that. So the client has appointed me to perform agreed upon procedures on trade payables. So identify that information. And also you have to add a statement that procedures performed were those agreed upon with the recipient. So you have to clearly mention one line, whatever procedures we have performed, those are the procedures which we have actually agreed with the client. We did not perform any procedures on our own choice, only whatever we have agreed, that things only we have performed. So add that line as well. And also you have to add a statement that engagement was performed in accordance with standards on related services. So there is one approach. No, you did not perform that agreed upon procedures in whatever manner you want. Even we have followed the requirements of SRS. That also you have to mention it. And identification of the purpose for which agreed upon procedures were performed. Even you have to mention the purpose also. For which purpose these agreed upon procedures are performed, mention that purpose as well. And also then list out all the specific procedures whatever you have performed, and description of auditor's factual findings. Mainly we are giving this report to report our factual findings. So then you have to make a list of all the factual findings, and a statement that procedures performed do not constitute either an audit or a review. Even add one line that whatever engagement we perform, that is not falling under audit, that does not even fall under review. And statement that the auditor has performed additional procedures, an audit or a review or other matters might have come to light that would have been reported. Even add a line that by performing agreed upon procedures, we got to know about these findings. If we would have performed audit or if we would have performed review, we might have got even more findings also. These findings, whatever we are reporting, those are only outcome of agreed upon procedures. If we have done the audit or if we have done the review, there could be other findings also. Just to make the reader aware the purpose of your engagement. And statement that the report is restricted only to those parties that have agreed. Even clearly mention that whatever report we are giving, this report is not for the purpose of everybody. Those whoever has asked to perform that agreed upon procedures, only for them we are giving this report, only those people should use it. And a statement that report relates only to the elements, account items or financial or non-financial items specified, and it does not extend to entities' financial statements taken as a whole. Mention that this report we are commenting only on one item, not on entire financial statements. After including all the contents, mention the date of the report, put your signature, and also mention place of your signature. So all this contents must be there in the report of your factual findings. Quickly, if we have to do a recap once again, so what and all should be contents, title should be there, address should be there, identify the information and state that the procedures are actually agreed. You have done the engagement as per SRS, and you also mention purpose and list out the procedures whatever you have performed. Then report your factual findings and mention that this engagement do not constitute either audit or review. And you should also mention this is only limited procedure. If you performed audit or review, there could be other findings also. Next one, mention that report is restricted only to those people who have asked you to perform that agreed upon procedures, and mention that your engagement does not cover entire financial statements. And then finally mention the date of the report, place of the signature, and then auditors or practitioner's signature. And whatever things you have done regarding this agreed upon procedures, maintain a proper documentation also. Each and everything should be included in your engagement documentation. So that's all, very simple standard. This is what SRS 4400 gives the guidance regarding agreed upon procedures. Hope you guys are able to understand it. So since we are successfully done with revising SRS 4400, on the similar lines, we will also try to revise now SRS 4410. Once again, a very simple standard. Like SRS 4400 is going to give guidance on what? Agreed upon procedures. If you are accepting an engagement regarding agreed upon procedures, how you should perform that engagement, that guidance we have got under SRS 4400. Now SRS 4410 is going to give us guidance regarding compilation engagements. So I've already told you compilation engagement, the same thing they try to even explain here in the meaning. So first of all, what is the meaning of the compilation engagement? So compilation engagement is an engagement in which a practitioner applies his accounting and financial reporting expertise. So practitioner in the sense we chartered accountants, we apply our expertise, whatever accounting expertise we have, whatever financial reporting expertise we have, we apply that expertise for what purpose? To assist management in the preparation and presentation of the financial information of an entity. So we are going to use our expertise and we are going to help the management in the preparation and presentation of financial statements in accordance with applicable financial reporting framework. And finally, here also we issue a report. After we are done with the compilation engagement, we issue a report. And once again, we have to be very careful here. Even after completion of compilation engagement, whatever report we give, in that report, we don't express any kind of conclusion, we don't express any kind of opinion. Understood? Right. So now, sir, why management might need our help? Why management might need our help? As I've told, there could be numerous reasons. So might be the management might not have their own internal expertise to help in the preparation of the financial statements. So that's why they might approach you for the purpose of assisting them in the preparation or presentation of financial statements. And that preparation, that assistance, whatever you are giving for the preparation and presentation of financial statements, that could be for various reasons. So you might be giving assistance to the management for the preparation and presentation of financial statements, which they are required to do as per the requirements of law. Like some company X Limited is there, as per the requirements of the Companies Act, every year the management is required to prepare the financial statements. So might be in order to comply with that requirements of the law, the management is required to prepare financial statements. That's why they might come to you and they might ask you for your assistance. In some cases, management might be required to prepare the financial statements for some special circumstances, not because of the requirements of law, but for some special circumstances, like the banker has asked them to prepare the financial statements as per special purpose framework. Then the management might approach you asking you to help them to prepare the financial statements as per special purpose framework. Or they might be required to prepare the financial statements for the purpose of the contract. As per the contractual terms and conditions, they might require to prepare financial statements. Now the management might approach you asking you to assist them in the preparation of that financial statements as per the requirements of the contract. So as a practitioner, whatever services you are offering in the preparation and presentation of financial statements, that financial statements could be general purpose financial statements, that financial statements could be special purpose financial statements. See, but one thing you have to remember here, see, we practitioner, we are going to assist the management in the preparation of the financial statements. Now, whatever financial statements that have been prepared using our assistance, using the practitioner's assistance, whatever financial statements that are finally prepared, who is responsible, who will take up the responsibility for the financial statements? So the responsibility for the complete financial statements, that final financial statements, whatever have been prepared, that financial statements responsibility is always going to rest with the management only. So the management can't shift the blame on to the practitioner. And one more thing we have to remember, see, we practitioners are appointed to assist them in the preparation and presentation of financial statements. For the purpose of preparation and presentation of financial statements, management will give you various accounts, various records. Are you required to verify them in order to assist them in the preparation of the financial statements? The answer is no. We are under no obligation to verify whatever information which has been provided to us. No need to verify that information. We don't have any such obligation. Just we will use whatever information management has given and we assist them in the preparation of the financial statements. So the ultimate responsibility for the final outcome of the financial statements will always rest with the management only, because we don't have any responsibility to verify the accuracy. So we need not take any responsibility. The ultimate responsibility is always and always going to rest with the management of the organization itself. So this thing we have to be very clear about it. Next. So now scope of the compilation engagements. So this is also one simple paragraph. So as I have told, compilation engagement. Sir, in compilation engagement, what you are supposed to do? So in some compilation engagement, the management might require you only to help them regarding presentation. In some circumstances, the management might require you to help them only with the presentation. Like for example, they have maintained all the books of accounts, they have made all the estimates, they have made all the assumptions. Just they want your assistance to help them in the format of the financial statements. Some managements might need your assistance even in determining accounting estimates also. They need advice in various stages of the financial statements. So like some management is coming to you and asking, sir, we want your assistance regarding accounting principle. Which accounting principle we have to follow? That assistance they might ask you. Some management might come and ask your assistance even for the purpose of accounting estimates also in the preparation of the financial statements. So like that, what will be your scope of compilation engagement? It all depends on the facts and circumstances of each and every case. But generally, what will be covered in the compilation engagement in normal circumstances, what we generally do is, like if you see this point here, application by management of the judgments required for the preparation and presentation of financial statements. Some managements might require your help in applying their judgments in the preparation and presentation of financial statements. Some management might require your help in the selection and application of appropriate accounting policies. Some managements might need your advice regarding which accounting policies will be appropriate for them, which accounting policy they have to follow. Some management might require your help regarding developing reasonable accounting estimates. So some management might even ask you to help them in making accounting estimates also, like what should be the provision for depreciation, what should be the contingent liability. So they might need your assistance in this area as well. So it all depends on the facts and circumstances. What will be included in the scope of compilation engagement, what will not be included in the scope of compilation engagement, it all going to depend on the facts and circumstances of each and every case. Then, okay sir, if the client has asked us to do the compilation engagement, then what are the principles which we need to follow? More or less, the principles are going to remain same like related services only, like agreed upon procedures only. Number one, here also we need to comply with the ethical requirements. Here also we try to comply with ethical requirements. If at all we come across any threats, we should try to eliminate that threats. However, are we required to be independent in the case of compilation engagement? Do you think, are you required to be independent in the case of compilation engagement? The answer is no. Why? Because compilation engagement is also a non-assurance engagement. We need independence only in the case of assurance engagements, same like agreed upon procedures. So here also same thing, because it is a non-assurance engagement, independence requirements do not apply. But always, as I have told, if the client is specific on independent person to provide compilation engagement, then there will be independence also. But independence is not guaranteed always. Next one. Okay, so we'll try to check whether ethical requirements will be able to comply with or not. Here also we need to have engagement acceptance and continuation. Basically, we should accept a compilation engagement only when we have obtained agreement of the management regarding terms of the engagement. Nothing but here also we need to draft the engagement letter. In that engagement, we have to understand on various terms and conditions. Unless and until the management did not give their acceptance to the terms of the engagement, we will not accept that compilation engagement. So that's what they say here. The practitioner shall not accept the engagement unless the practitioner has agreed the terms of the engagement with the management. First, you have to agree with the terms of the engagement with the management. How we generally agree to the terms of engagement? By way of drafting of the engagement letter. And in that engagement letter, what and all terms you have to include? Like if you see intended use and distribution of the financial information. So you should clearly specify in the engagement letter whatever assistance you are providing in the preparation of the financial statements, what is the purpose of that ultimate financial statements, who are the intended users of that ultimate financial statements, to whom it will be distributed. So that thing we need to clearly include in the engagement letter. And also applicable financial reporting framework. Financial statements are required to be prepared as per which framework, that also has to be identified in the engagement letter itself. What is the objective and scope of the compilation engagement? What you are supposed to do, what is covered, what is not covered. As I have told, management might need assistance in different areas. That objective and scope has to be clearly identified. Responsibilities of the practitioner. You need to add one paragraph in the engagement letter, what and all are your responsibilities. And also, what are the responsibilities of management? Like what will be responsibilities of management? The management is responsible the financial information. For the financial information, who is responsible? Ultimately, management. And also they are responsible for implementation of internal controls. Obviously, auditor, this practitioner will not be appointed for implementing internal controls. It will remain whose responsibility to implement internal controls? Management only. Who is responsible for accuracy and completeness of the records, documents and explanations? Once again, management. It is management responsibility to provide the practitioner with accurate records and documents. As I have told, you are under no responsibility to verify the accuracy of the documents provided to you. It is the responsibility of the management to provide to you the accurate documents and records. And also what judgments are needed. Whatever judgments which are required to be taken in the preparation of the financial statements, that judgments making responsibility is also going to rest with management only. Basically, like audit report only, we have to include one paragraph where we talk about practitioner's responsibility. We have to include one paragraph where we are going to talk about management responsibilities. And finally, what will be the expected form and content. Finally, when you are done with the compilation engagement, you will give a report. What will be the form of report? What will be the content of the report? That also you need to include it in the engagement letter. So an engagement letter containing all the terms and conditions should be prepared by the practitioner, give it to the client, get the acceptance. Only when you get the acceptance of the client, then only you continue the compilation engagement. Sir, what about recurring audits? Sir, last year, anyhow, I have done the compilation engagement for the client. For the year 23-24, last year, the client, the same practitioner, I am a practicing chartered accountant, I helped the client X Limited in the compilation of financial statements. In the next financial year, in the year 24-25 also, the same client has asked me to do the compilation engagement once again. Last year, I would have already given engagement letter. In the current year also, am I required to give engagement letter once again? Generally not required. It all depends on the facts and circumstances. If the practitioner feels it necessary because of any revision of the terms and conditions, then issue engagement letter once again. But if there is no change in the terms and conditions, whatever terms which are applicable for the previous year, those are going to remain valid even for the current year also. No need to issue engagement letter year after year in the case of recurring engagements. Now, you have to start performing the engagement. So these are something like preliminary engagement activities. So you will check the compliance with the ethical requirements. Then you will check whether you can accept and continue the engagement or not, and even you will get the engagement letter signed by the client. So after that, you have to start doing that compilation engagement. Now, what are the various steps involved in the compilation engagement? Number one, obtain an understanding. Sir, what I should obtain an understanding? Basically, you need to obtain understanding about entities, business and operations, and what is their applicable financial reporting framework. Why? Because unless and until you understand the client's business, you will not be able to advise them. If you have to help the client regarding which accounting policy is appropriate for them, like for example, I have to give advice to the client whether they should follow SLM or WDV method. Unless I know what is their consumption pattern of the machinery, I will not be able to give them advice. So that's why, like in audit, even in the compilation engagement also, first spend some amount of time in understanding the client's business and what is their applicable financial reporting framework. Once you are done with that, then you start compiling the financial information. So that means you start giving advices to the client regarding compiling the financial information. Finally, discuss with the management regarding estimates. If at all you feel that management need assistance in the making of accounting estimates like provisions, depreciations, contingent liabilities, you also assist the management in making that accounting estimates and assumptions. Next one. In case if you find that assumptions are inaccurate, in case if you feel that management has already made estimate which is incomplete, inaccurate or otherwise unsatisfactory, then you should bring that to the management and request corrections. If management has already made estimates but you find something is wrong in that estimates, what you can do is you can advise the management to rectify them. And after you have given the advice, management will compile the financial statements. Once the management, after considering all your advice, has prepared that financial statements, get that copy of the financial statements once and read it. So read the compiled financial statements prior to completion. So practitioner is unable to complete the engagement. In some circumstances, what will happen is management will not provide you records to give advice. Management will not give you records. See, they have appointed me for what purpose? To assist them in the preparation of the financial statements. If I have to assist the management in the preparation of the financial statements, they need to give me some information. But the management is not giving me information to help them to prepare the financial statements only. What I should do? In that cases, you are unable to do your job there. So best option available is withdraw from the engagement. So what you should do? Withdraw from the engagement. Then in some cases, what will happen is management, you have given the advice to the management, they have compiled the financial statements, and that compiled financial statements are given to you. Like I have told here, once the financial statements are compiled, you have to read it before finalization. Now, when you have read that compiled financial statements, sometimes you might suggest amendments. Sir, in this compiled financial statements, these things are wrong. So if you find any changes which are required to be made to the compiled financial statements, what you should do? Advise the management. What you should do? You should advise the management. Like as you could see here, as a practitioner, if the practitioner becomes aware during the course of the engagement that compiled financial statements do not adequately refer to the applicable financial reporting framework, you came to know that management has compiled the financial statements not in accordance with the applicable financial reporting framework, or amendments are required, or if you find that compiled financial statements are otherwise misleading, you found that they are misleading, what you should do? So first you should go and advise the management, sir, please make the amendments to the compiled financial statement. If the management does not do it, then what you should do? There is something wrong in the compiled financial statements. You ask the management to change that to make some changes to the compiled financial statements, but the management is not agreeing, they are declining it, or they are not permitting the practitioner to make the proposed changes, then what you should do? The standard has simply told withdraw from the engagement. Withdraw from the engagement. If your purpose is not at all getting served there, you are giving advice, you are assisting the management, but they are not ready to take the advice, then what is the purpose of you being there? So withdraw from the engagement. In some cases, withdrawal from the engagement will not be possible, whatever may be the reason, might be because of some laws and regulations. In case if a withdrawal is not possible, then the auditor shall determine what are your professional and legal responsibilities in that circumstances. And finally, after you are satisfied with all the compiled financial statements, you should ask the management finally one acknowledgement. Sir, for these financial statements, we are undertaking the responsibility. So ask the management to give a written confirmation that they will take the responsibility for the finally compiled financial statements. This also you should do it. Clear? So these are all the 7 steps which you need to follow while performing the engagement. What are they? Number 1, first need to obtain an understanding. Then you need to advise the management regarding compilation. If needed, discuss with the management regarding accounting estimates. Then finally, read the compiled financial statements prior to completion. And if you are unable to complete the engagement, withdraw. If you find any amendments are required, suggest the amendments. If the management declines, then also withdraw. If everything goes fine, if the compiled financial statements are okay, your job is done. You ask the management to give a written acknowledgement that they have they have taken the responsibility for the financial statements which have been compiled. And then finally, you need to fulfill certain requirements with communication requirements with management and those charged with governance also. So whatever matters, all matters concerning the compilation engagement that you find are of sufficient important to merit the attention of management or those charged with governance, you should take that all to their notice. And finally, once you are done with the compilation engagement, you have to give the report. And as I have already told you, in that report, we will not tell any kind of opinion or assurance. So what contents will be there in that report? Title should be there. Address should be there. Then you have to mention one line that you have compiled the financial information on the basis of information provided by management. So you have to make it clear. We did not compile the information on our own knowledge. We have compiled the information after we have got the information from management. And also, as usual, you have to explain a paragraph where you are going to explain the responsibilities of the management. You have to include according to which financial reporting framework these financial statements are prepared. And also you have to identify title of each element of the financial information, what and all elements are included in the financial statements that you have to describe. And along with that, a description of practitioner's responsibilities, what are your responsibilities, you explain it. And also explain that what is a compilation engagement. Clearly describe the nature of your engagement. So you should say that compilation engagement is not an assurance engagement. So you have to say we are not giving any kind of assurance. We did not even check. This is very important. You are not required to verify accuracy or completeness of the information provided to you. Management provided information, you compiled. There is no responsibility on you to even check the accuracy of that information. And also add one line that through this compilation engagement, the auditor does not express any opinion, or even he is not conducting any review. He will not give any kind of conclusion. And in case if you assisted the management in preparing the financial statements according to a special purpose framework, then you have to say that, then you have to include for what purpose that special purpose financial statements have been prepared. And you also have to draw the attention of the readers that these financial statements are prepared with a special purpose framework and they will not be suitable for general audience. So specifically, if the management is asking you to help them in the compilation of the financial statements as per special purpose framework, they have to specifically mention that this has been prepared as per special purpose framework, and these financial statements are only for that specific users, not for everybody. And finally, after including all the content, you have to mention the date, then you have to sign it, and even the place of signature is required to be maintained. And even on this quality control also you have to maintain. SQC1 will become applicable here. As per SQC1, you have to maintain even quality in the compilation engagements as well. Finally, whatever things you have come across while doing that compilation engagement, all the things are required to be documented. Like what significant matters you have come across, what information, what compiled, whether whatever compiled financial information is there, is that matching with the books of accounts or not, and whatever final copy of that compiled financial statements is there, that also you have to document it, and all other copies of the supporting documents. Clear? So this is what regarding SRS 4410. These are 2 simple standards regarding related services, very important from the examination perspective. Clear? So that's all for now. See you in the next class with the next chapter. Bye everybody. Take care.